All right, what's up, guys? It is Thursday, March 10th, and we got our little weekly meetup here. So we'll dive in. I don't want to keep you too long. Um, I am mentally fried. So as soon as I get done here with y'all, I'm going to eat some Chinese food and take a nap and then get back up here for the futures. But for today's session, you get your fade and you get your pop. So the S&Ps are down like 0.5%. I think more interesting is the QQQ. You're down like 2 and change at one point, so you do get a bit of a bounce here. And keep in mind, none of these bounces are changing structure, so things are still bearish. But you got the Qs down, 1% and change on a day where Amazon, one of the most heavily weighted stocks in big tech, is up 5.5%. So really, I mean, Amazon today kind of masks really a lot of weakness in the QQQ. Even though it's down 1%, imagine Amazon's not up 5.5, 6% today. And Amazon, that's still bearish as well. So we'll get back to that one. But in terms of these pops here, they're pretty brutal, especially if you're short. I think the key here is where you're getting short. Because even if we continue to trend lower for the next month, 2 months, 3 months, these short covering, these short squeezes, they're going to be nasty. So you want to make sure you're not getting in that pattern of, we're running towards major support. The market's down 2%. Everything certainly feels really bearish. And that's where you're buying those puts. They're going to keep on squeezing you here. So the key is we want to continue to, short the pops. So, like Uber. For those of you that did the class, we had a short here, short in that pop, and then we shorted it again a couple of weeks ago. So there's structure like this all over the place right now. It's just the difficulty is everything's a little bit extended. So you would like to see a bounce here to get some shorts on the table. But in terms of the indexes, regardless of how nasty these pops are, doesn't change anything. We still have sell signals. You still got bearish weekly squeezes here. So in my opinion, the market's going to continue to trend lower. Where that all changes, as y'all know, is if we close back above the weekly 21. So there's a lot of work to be done here. But for now, I think we continue to short the pops. One suggestion I do have, though, because, trying to find like that day-to-day clarity, I think with a daily chart is a little bit tough. Because 1 minute we're bearish, and we're down, 2-3%. We're gunning for support, and then they just totally flip the thing back to the upside. So I think what could be helpful in this market is if you take something like the S&Ps or the QQQs, take that daily structure. So understand what you're working with as far as the trend, the buy signals, sell signals, momentum. But then I think you might want to take it down to a 4-hour chart. Because there's a lot of back and forth here, but to me there's a little bit more clarity here. It's a little bit cleaner. You got this 4-hour squeeze. We're under the 21 EMA. There's a negative histogram. There's red 10x bars. There's negatively stacked EMAs. To take it down a notch to the 4-hour, this is something we can anchor to, where we can treat this just like a daily chart, but we're more so trying to gauge the short-term move. So the way I look at it is, to the extent they continue to trade under the 4-hour 21, and you're in a squeeze, you have negative momentum. Expect to be some, expect for there to be some back and forth. But I think ultimately that 4-hour squeeze fire is short. So it's a little bit cleaner, I think. And I think the 4-hour, that's one notch under the daily. So you can still catch some pretty big moves here. But when I look at the QQQ, granted, you got a pretty good bounce here. But for now, it's a bounce into your falling 4-hour 21. And you got the squeeze and negative histogram. So tomorrow and into next week, this is the time frame I'm going to focus on. I've got the context of the bearish weekly squeeze. I've got the context of the bearish daily charts, the sell signals. but it's a lot of back and forth here. So if I'm trying to get a better sense of where could we go today, where could we go tomorrow, kind of like the 4-hour. For under the 21, histogram's negative, right? You got all that bearish structure. I think it keeps trading lower. In the shorter, expect for there to be some more pops, but if we're taking that 4-hour chart, these pops don't really change the structure until you get into a few solid closes back above the 21. So the point being is, treat that 4-hour chart like a daily chart. So if that was a daily squeeze, I'd like to think most of us are waiting for the next flush. And there might be a few bounces into the 21, but if that's a daily squeeze, negative histogram, negatively stacked DMAs, all that bearish criteria, you're going to look for that to continue to fire short. Where you stop looking for that to fire short is back above that 4-hour 21. So that's what I'm watching on the Qs. That's what I'm watching on the S&Ps here. And the IWM. Meaning, in the short term, along with the daily chart, along with the weekly chart, in the short term, right, next few days or so, the S&P, we'll look at the SPX. SPX could bounce into 42.90. So that's another like $40 or so. Doesn't change the bearish structure of that 4-hour squeeze. So hopefully that makes sense in terms of like context. Dial it down to a 4-hour. You could take it to a 2-hour or a 1-hour. I like the 4. So that pop that we just had over here, it's uncomfortable if you're short. Doesn't change the structure. So that's no different than your daily chart rolls over, reverts to the 21, gets rejected. You kind of look for the continuation lower. You stop looking for continuation lower once you're cranking out a few closes back above the 4-hour 21. So I hope you find that helpful. But that's going to be the focus for me here. And you're doing that with the bigger picture context. Today's pop, yesterday's pop, like nothing's changing here. Structure is still very much bearish. Make sure you're shorting pops. Make sure you're not shorting in the hole, because that's where it gets a little bit unpleasant when you get these massive rips here. But I do want to cover a few setups. So in terms of what we have done here this week, again, I'll show you Uber because it's a good example. That pop doesn't change anything. It's still a downtrend. Still a really bearish daily squeeze. The beauty of that pop, though, is now you're going to get the best risk reward possible. So I think what we did on Uber was we had our exit on the swing trade. I think it was at like 38. So we're getting short there saying, hey, if this closes back above 38, at that point you're back above the weekly AEMA. It's not the shift we're looking for. We're looking for the puke. So you put the exit at that level, but we're putting the short on right here. So think of the difference. Never mind, where we are in relation to the 21. If that's your exit, and say you're looking for a flush down into the recent low, so you're looking for a flush into 30, that's the exit, and that's the downside target. You're going to get your best risk reward, whether it's a call credit spread, whether it's it's a debit spread. Basically, the closer your entry is to your line in the sand. Here's where this market is really dangerous: is you're shorting down here. You're looking for a move into 30, but you're shorting this thing at like 31. Keep in mind, right, this is a crazy market. So when things flush here, we're flushing really hard. So here's what ends up happening. Very quickly, a stock like Uber, right around the point in time where most folks are going to start to short it, here comes the big break of support. Uber's going, to 25.20. At that point in time, if we just kind of measure it, let me see, break out the old calculator here, help support the argument. Your 21 EMA is up here. We'll call it 35. Trying to short that break of support around 30. 14% under your 21 EMA. Now, from the low of $28, it rallies all the way back to almost, we'll call it 32.80. It's a 17% rip. So whether you're doing call spreads down here, whether you're doing put debit spreads, taking your shorts at this point in time, because we're so far from the 21 EMA, those rips against you, they're brutal. And a lot of times, especially with options, like there's no trading around that kind of thing. You're buying those puts, and I'm not referring to like all of you. I'm just saying this is what retail traders do, so we got to understand it. You're jumping in for that pretty obvious move, right? Let's short the break of support. You're buying these puts when they're basically at their most expensive. Right? This thing's pulled back 14, 15%. Those puts are full of all kinds of premium. We know what happens to those puts when this thing rips 15% in a couple of days. You just get totally crushed. So the key is to be on the other end of that. And the beauty with this market is you can short Uber up around 36, and a few days later you're taking a trade off at 30. Right? So getting on the right side of it, you're catching that $6 move. In terms of percentages, that's like a 16% pullback. So the beauty of this market with the volatility is if you're trying to short these things and you're getting the right entries, a lot of our trades have been no more than a week. We've been dancing with the IWM for like a month and a half here, but the Ubers, the Comcast in this market, if you nail the entry, doesn't take much, 4 or 5 days later, you're back there low. So you want those 10, 12% flushes to work in your favor. Getting short down here, you might catch that 10, 12% pop. So when things are this volatile, that's really the key. So in terms of, is there anything lining up that we could short at that moment in time where we can work that good risk reward? That's where it all gets a little bit tough here. One name I will show you actually is Amazon. We got the news last night and the reaction today of that 2-for-1 stock split. For now, doesn't really change anything. So maybe approach this one with a little bit of patience. I think if we end up getting rejected here to 21, could come right back down to those recent lows. So that could make for a decent short. But more importantly, say your exit, for conversation's sake, say your target is a move back down to 2,700. Again, the beauty of this market is you can catch that $300 flush in a few days. But what's so great about an entry here, maybe your exit is going to be a close above 3,000. You can pick an exit here nice and tight, and you got way more room to the downside. But if you're shorting into that flush, not only are you overpaying, at this point, you're $300 from your 21 EMA. The day is coming where you're going to get that rip. So I do think Amazon's pretty interesting here. And potentially the way to go about this might be to try to short it in a fashion where even if it rallies, we could potentially be in good shape. So for example, you could do a broken wing butterfly, maybe at 3,100. A few things I'm going to price out. When I've got a few ideas here for Amazon, I'll put it on the channel, and I'll make sure I share that with y'all. But what I like is you have the bearish structure. You got the bearish daily squeeze. You got a 3-day squeeze here, very bearish, and you got the weekly squeeze, which is only 2 weeks into firing here. So my thinking is you take that bigger picture structure. If this taps out at the 21 EMA, you look for that to continue in the direction of that bigger picture structure, that weekly, that 3-day squeeze. But we could short it here, and it could be painless if it goes against us. If you short it down here, it's pretty painful. So keep Amazon on the watch list here, and I will keep you all posted as far as what I'm looking at there. Yeah, I got to price out a few things tonight, so I'll keep you posted on that end. A few more setups though. One I want to show you here is Intel. So we took a short on Intel. I think it was Tuesday. We took a short in the mastery on Tuesday here. You could still work an entry. In terms of getting like great risk reward, I think you want to do that on a bounce if you could. But this isn't too extended just yet. So I think if you can break 46, got 46 holding up back here in January. You see it holding up again here today. If you can break 46, I think it happens quick in this market. It happens really quick. If you can take out support, I think it could head down towards that recent low. But here's what we can do. We can take that daily structure, then we can dial it down to maybe a 4-hour chart. So this is something we can work with. If this thing pops tomorrow into the 4-hour 21, then it starts to trade lower, that's a pretty damn good entry. Because if the 4-hour squeeze can fire short, and then you break 46 as support, there's your flush. So another thing I'm noticing in this market is to break these levels of support, and this one's pretty decent, but ideally, right, as you're trading, a key support, what's working really well here is if you can stack as many squeezes on top of each other as possible. So like the first one that comes to mind, Uber's a good example, but looking back at Comcast, this one just sticks out for some reason. Back here, you had the daily squeeze, but there was also a 4-hour, a 2-hour, a 1-hour, like 30-minute, 15-minute, 5-minute, and all of them had bearish structure. So from top to bottom, everything's lining up for the flush. And that, that kind of release of energy, that's what can take you through support. So we'll jump back to Intel here. Got the daily squeeze. Got your support level. And then you got the 4-hour, got the bearish 2-hour squeeze. So anchor to your daily, anchor to your 4-hour, your 2-hour, take your pick here. But I think tomorrow, any pops here into these 21 EMAs, whether it be the 2-hour 21, I'd kind of work at the 4-hour. I think any pop here is a short. And for transparency, we already got some shorts on Intel. But I think under 46, that could be a nice little flush. So any bounces there, we'll look for another short. But we'll hold what we got for now. So we got Amazon, we have got Intel. And then, dare I say it, also keep in mind, this all depends on the market. So if the market rallies, none of these shorts are going to work. So that kind of makes the easiest short of all just shorting the indexes. But we like our stocks, right? But yeah, dare I say it, if Tesla keeps hanging out under that 200 SMA, never mind the 200, just the daily 21 actually. But you got the 200 here as well. But if Tesla keeps hanging out under that 21, typically a stock can only do that for so long until it basically has to flush. So where we are right now is basically where we were back here. Every little pop just gets rejected. Like, you can't get that move back through the 21. So you're building up energy. Ultimately, it rolls over pretty hard. Kind of the same. You're getting some pretty good pops here, but they're not taking you through the 21. Right? So you take that, then you take the negatively stacked EMAs, We have red 10x bars on the weekly and the daily, so bearish momentum. There's a bearish 3-day squeeze that fired short. So remember, like this fired short. So this means typically you're going to get 5-6 bars of momentum once the squeeze fires short. This is a 3-day chart. So that suggests there's a potential for another 3, 4, 5 3-day bars. Another 10, 15 days of some continued downside here. And the big one, it's the weekly squeeze. This hasn't even fired short yet. So never mind the daily 21. You got to keep it in mind. Right? Bearish daily squeeze, bearish 3-day. But the biggest of them all here, the weekly, how much longer can this hang out under that 21 EMA? As the moving averages cross, as the moving averages start to tilt lower, building up all kinds of huge bearish momentum. We've done it for 1, 2, 3, 4, 5, 6, 7 weeks. So look at this like a trend that's, this is kind of skating on thin ice. So this kind of weekly structure, that kind of potentially bearish weekly squeeze, what that can't afford is a 3-day squeeze firing short, a 2-day squeeze gearing up to fire short, and a daily chart that hasn't been able to close above the 21 EMA since like January. I think back above 900, it's in much better shape. And it does come down to the indexes. Tesla's not going to roll over if the market rallies. But you take all that structure, and then you lose your 200 SMA again. I do think this thing could slip down to 700. So the key would be, can we structure a trade here where we could have a target of 700, and I think an exit. Let's see, where would the exit be? What I would like to do is have an exit on a close back above the weekly 21. Let's price it out, shall we? Earnings on the 27th. Earnings on the 27th. All right. Let's see. Tesla. So we could probably go, April. So if we're going to look for a flush to 700, we might as well make it worth our buck, I would say. Let's see. Expected move is $140, which is almost exactly 700. Let me play around for a second here. That's pretty solid. So I like to do the in the money call spreads, as you know. So in April 14th, 780, 800 call credit spread. You're selling the Delta 65 call. $12, $18. Let's analyze it. Let's look at this into, say, March 25th. Right? Kind of give it a few weeks. March 25th. All right, so per contracto, a move into 900, we would lose about $340 per contract. Any flush down towards 700 would net you about closer to 800. So to potentially make about 800, and we're risking about 350. I like those numbers, right? I like those numbers. And that sounds like such an extreme move to look for. It's like you're looking for a flush into 700. you've got to keep in mind in this kind of volatility, the average true range gets crazy elevated. I don't have the exact number here in terms of what Tesla's average true range is. But if we measure the Keltner channel, let's just call it 5 to 860. It's like $50, $60. So $50, $60 average true range. Well, if you start to fire a daily squeeze short, a 4-hour squeeze short, a 2-hour squeeze short, and a 1-hour squeeze short, if this thing starts releasing all that energy with that backdrop of a sketchy weekly chart, with a $60 average true range, it's a couple good days of work to get you down to 700. That's the market we're in here. So I do think Tesla's interesting. But yeah, just please keep in mind, Amazon, Tesla, Apple, where the Qs go, where the S&Ps go, they go. So Tesla's probably a great short down to 700 if your S&Ps and your Qs are taking out these lows. If your S&Ps and your Qs are back up here at the 200 SMA, trading back above it, we're probably having a tough time shorting anything. All right, so you got Amazon here. I like Intel. And I will be watching Tesla. One last one for you here on the short side. And keep in mind, there's a lot of it right now. And a lot of the names we've talked about. So, like Uber, keep Uber on your watch list. If this bounces back towards 21, I think you short it. So names like Uber, names like Snapchat. I think a handful of you have been shorting DraftKings. Great short. And I think you look for an entry on the next bounce. I know a handful of you have been shorting DoorDash, I think. So that was a great flush. Short that on a bounce. A lot of us traded Comcast together. And if Comcast could bounce enough, I think we know where all the setups are. So I'm just showing you a few of interest here, but they're all over the place. But the last one here, guys, is Apple. And we took off Apple this morning in the options room for profits. I think this at some point gets into 150. But we took profits here today. Quite the roller coaster. We shorted it back here. We had like a 45-second window on that morning to take profits. Then we sat through that rip. We sat through that flush. Another bounce yesterday. We took the money and ran here today. But I do think if the Qs rally, Apple's going to rally. But if the Qs keep trending lower, the market keeps trending lower. I think this daily squeeze here on Apple could take you into 150. And from a bigger picture, kind of point of view here, there might be way more downside. So what we've seen a lot of the strongest trends of, last year, what we've seen a lot of them do is make that full pullback on the monthly chart. So the Qs have done it. S&Ps have done it. Amazon's there. That is your 700 level for Tesla. Get a pretty good bounce. There's Microsoft. Towards the monthly 21. There's Netflix. The list kind of goes on and on. Bring this up to say if the monthly 21's down here at 140, and like anything else out there, get that first weekly close under that monthly AEMA, it is liable for that full pullback. So to look for 150 here, not asking for too much. Your average true range right now is probably like, $4 or $5. So it's a good day and a half of work. I would want to short it on the next bounce, though. You did have one of those opportunities back here. And in hindsight, it would have been great great to add to. But I think any bounce into your 21 EMA, look for the rejection. Then I think you look for that flush down towards that 200 or that 150-ish level. To work a good risk reward, you're going to need that entry a lot closer to the 21 than where we are right now. Right, so we're looking at Apple for a short, Amazon for a potential short, Tesla. The easiest way to cover all those bases would be the indexes. But we get these like 3% pops, right? And this is just how busted structure is right now. We get these 3% pops. I mean, even more off the bottom. But we get these crazy short squeezes. They don't even get us to the 21 EMA. That's how busted structure is. I think AMD, not to pick on AMD, but AMD is up like 8% yesterday. All that does, right? A huge day, 8%. All that does is get you back to your AEMA. Doesn't do anything as far as changing structure. So things are pretty broken here. So yeah, it would be the simplest trade to just short the QQQ or to short the S&Ps. But in terms of where can we get a great entry, to me it's not down here on the QQQ, and it's not down here on the S&Ps, even though I think they trade lower. So with the understanding that if they trade lower, everything does, I kind of think in Amazon, where we can take an entry and work a really tight stop, it's just a bit more attractive. If Apple could bounce, I think the same thing there. And Tesla's pretty close. So you could risk one to potentially make two. And I think that's pretty solid. So those are all things to keep an eye on there. And in terms of what we have for open positions right now, we got the Intel short. We took Apple off in the options room this morning. And we still got this pesky IWM. So to me, the IWM is still very much a short. This doesn't throw in the towel unless the S&Ps do. It's just what it comes down to. Two phases of the squeeze, right? And we tend to, for good reason, love one of those phases. And not so much love the first phase. The first phase is that buildup of energy. It's just nasty ass chop. That's IWM right now. Nasty ass chop. But we're under the 21. I've got my sell signals. Got my negatively stacked EMAs. My daily squeeze is firing short. My weekly squeeze, rather, is firing short. Bearish momentum. But I can anchor to that 4-hour squeeze. Because at this point in time, for me to get that flush I'm looking for, 190, 185. Last time you got a good flush, the 4-hour squeeze fired short. Then you got the next flush, the 4-hour squeeze fired short. So I can anchor to that tomorrow into the weekend, working with the daily structure, working with the weekly structure, but just using this as kind of a gauge of is momentum bullish or bearish. Is there stacked DMAs or no stacked DMAs? Does this squeeze under the surface look like it's going to do me a favor? Fire short, break support, and give me the nice profits? Or is this all shaping up to fire to the upside? It's a little bit of a cleaner read than the daily. So we're still holding on to that one. We got some Intel. And then the only other thing we got open right now is an SPX Iron Condor, which I suppose today's close kind of worked in the favor of the Condor here. We got short puts down here at 4,200, which could get tested tomorrow. We'll see. But that's what I got for y'all, good peoples. One name here to the upside, and of course there's energy and oil. So Devon, EOG, they all still look pretty perfect. But one name I did want to show you here is Costco. This to me shapes up pretty good. We got a little bit of that multi-squeeze action going on. So let's kind of start with the very first squeeze and just take it, top to bottom. That's a good looking weekly squeeze. You're above the 21. Typically, I'm not really going to dig the negative histogram, but I think the other time frames kind of compensate. But good structure, holds that weekly 21 EMA really well in a volatile market. So this is doing its own thing here. Got the stacked EMAs, you got green 10x bars, so that all checks out. Brand new 3-day squeeze, but that's pretty solid too. Stacked EMAs, squeezing at the 21. The 2-day squeeze might be the best looking one of them all. Positive histogram. So it's all good stuff here. Daily chart looks great. And then you've got your party starters. 4-hour, 2-hour. So I like Costco here. And we don't got to worry about earnings anytime soon, which is nice. So here's the trade. We'll figure out the trade together here. And then I'll answer a few questions and we'll call it a day. Try to sneak in a power nap before the futures open. But I would like the exit under the weekly 21. So on a weekly basis, we close under the weekly mean. I think we call it a day here. So that's like 510. Target to the upside. Well, if we're going to use the weekly 21 EMA as our exit, then to make that risk reward make sense, we got to really look for a move into, we can't work an exit here. And then our target is, move into 540. We want a bigger target. I'd look for a move back into the high. So let's go price something out here. However, is Costco that has the crappy spreads? This might be a bit of a buzzkill here. Let's see. 535, 530 is not bad. Not bad. All right, so let's check this out. April 14th expiration. 535, 525 put credit spread. So you're going to sell the Delta 50. We could. No, we can do this a lot more aggressively. We could probably sell the 550. Do we only want to have 35 days though? Let me look at this. 540. Sell a vertical. Spreads are a bit too wide on the weeklies here. All right, so we'll stick with the April monthly expiration. We don't got to go too crazy here. 540, 530. Let's price this one out. Throw it on the Analyze tab. Yeah, here's a good one. Okay. April 14th, sell the 540 put. Buy the 535. So we're going to sell the Delta 55, which isn't too crazy. All right, so let's take a look here. Let's check this out into March 25th. So we got an exit on this potential swing trade. On a weekly close under the 510 level. So per contract here, down at 510-ish, we're down like $120. If that move happens into March 25th. So you're down 120. And I think you look for a move at least into the previous high, 570. You're up 180. Not too bad. It's not quite 2-to-1 or 1-to-2, but not too bad at all. So If this could dip just a little bit tomorrow, and if all of a sudden you could get that spread for, say, $3 a credit, even $2.90 a credit. So you get a little dip tomorrow, get a little bit of extra meat on the bones here. Now we're risking 100 to potentially make 200. So see how just like an extra 10, 20, 30 cents a credit, same spread, same expiration, same entry, same exit. That little bit of extra juice there gets us that much closer to risk 1 to make 2. So this is kind of the art of the entry. Imagine you're taking this over the last couple of days, into the flush. So now you're getting that spread for, say, $3.25. Because as you get a dip, you get more premium. Well, they're $3.25. Now we're risking $70 to make 230. Doesn't look extended, but today's pop just starts to change some of that risk reward. So always keep that in mind. But I do like it still. So in terms of kind of our classic, bullish daily squeeze, bullish weekly squeeze, just total squeeze fest, I like Costco here. And there's a few more. Most of them are energy oil. This is the one I'll be focusing on for tomorrow. So I'm working the same game plan here, y'all. Shorten the bounces in the bearish structures and trends, which for now is the indexes and a lot of things, almost everything, but still looking to get long some good looking structure. To me, Costco, that certainly qualifies. But that is what I got for you here tonight. Hope you've had a good week here. A lot of back and forth. So make sure you're getting a good sleep, if anything. But let me jump in the chat here, answer as many questions as I can. Then we'll call it a night. And we're back for more tomorrow. Yeah, so good call out here. One I forgot to cover is Hershey. I have that on the watch list as well. I like the structure. Let's check the 60-minute squeeze out. That's my only issue right now. It's a really good looking daily chart. But as good as it looks, I still want to be... I just want to still respect the fact that with a market like the one we have right now, I think you want to look at it through the lens of, okay, at any point, anything could get taken to the woodshed. So if I'm going to get long, even if it's a good structure, I'm going to be a little bit more strict than I would be, in last year's market or 2021 or 2020's market. It's a really good looking daily chart. Right? But what I like about Costco is that 4-hour squeeze, the 2-hour, the 30-minute, they all look picture perfect. So real quick, we'll jump back to Costco. Every time frame looks the same. The weekly down to the 30-minute. You're above your 21s, there's squeezes, there's stacked DMAs. It's all really good structure. Every time frame is working together right now. My only gripe with Hershey at the moment, it's not quite the same. Where if you look at the 60-minute squeeze, the hourly squeeze, it's looking a little bit rough. It's under the 21 EMA. There's red 10x bars. If that was a daily chart, I wouldn't want to get long. So just in terms of trying to be a little bit more picky, when I would like to jump into Hershey, because I like the daily structure, is when the lower time frames start to add up. If we can get back above the 21, get a positive histogram, get some green 10x bars, some positively stacked EMAs. If this thing's locked and loaded with the bullish 15-minute, 30-minute, 60-minute squeeze, and then we have that kind of daily structure, I want to jump all over it. If you go look back here, right, kind of circle that off, go circle that off, go study that 4 hour, 2 hour, like all the way down to the 30-minute chart. And you'll kind of notice that pattern. Before that daily squeeze fires, like all the soldiers are lined up, so to say. So I am watching that one, but I would like it to tighten up just a little bit. It should move nice once it does, though. Right, to get your push, consolidates for a little bit. It's a really good trend. So I don't think it stops here. Um, Broadcom. It's one of the better looking semiconductors, but my only fear with getting long Broadcom would be it's just part of such a nasty looking group. So it kind of runs the risk of being guilty by association. Now, I don't think we have to avoid trading Broadcom to the upside just because the sector is ugly. I think it's just a position sizing thing. But if you were looking to get long this, maybe you're not, but if you were, because it's not in the best looking group, nor is it supported by the best looking market, it's probably not the setup for your max position size. We want to get a little bit bigger when Broadcom, every other semiconductor stock, every other sector, and the indexes are all lining up picture perfect. That's when you jump into Broadcom. Yeah, Terry, it's tough, man. It's tough, Terry. Because like I'm short the IWM, right? Same shit as a SPY. So 10 o'clock in the morning, 11 o'clock, 12 o'clock in the morning, it's like here we go. Like this thing's finally gonna break. We got the rejection. Like here we go. We're gonna flush, and then 2 hours later they pop it right back up. It's nasty stuff. It's definitely nasty stuff. Not fun to be a part of, that's for sure. Whether you're swing trading or day trading, just the way they're squeezing shorts here, it's my colleague Sam is simpler called it artificial. I think that's kind of a great way to look at it. It's like they take it down to 4,200. It's like somebody is hell bent to keep that thing above 42. Nasty stuff, Terry. But we keep on keeping on. Lucas, I got you. I can give you the scan. I can give you the scan here. Because we have been given permission to do that. So I'll share this with you, then I'll show you real quick how to use it. I probably should have asked if you're on Thinkorswim. So if you're not, this might not help out too much. But I'll put the scan link here in the chat. And if you are using Thinkorswim, check that out. If you aren't using Thinkorswim, because I run these scans every day as well, if you go to Simpler Trading's website, we got the Simpler scanner, and there's a few scans on their scanner that are kind of tailored to these daily squeezes I like to trade. So check out the Simpler scanner on the website, or you can use the OG TTM squeeze scan that I just gave you the link for there. Boom, there we go. There we go. So Lucas, I hope that helps. Hope that helps. Hey, we got Corey, a fellow napper. What's up, Fernando? Josh, USO. Thanks for hanging out, by the way, guys. These are tiring markets. I'm gonna get my quick nap in. Got to do some simpler work, and we'll call it a day. Very nice. Very, very nice. This is buy the dip kind of stuff right here. Yeah, pretty straightforward. Good trend. Moving averages pointing higher. There's weekly and daily structure. There's weekly, daily momentum. It all looks really good for a buy here. I'm actually going to I'm going to take that from you if you don't mind. Probably a similar play. Let's see. This is United States oil. UNG's natural gas. There's a really good 3-day squeeze here on UNG. But Josh, I like USO a lot. I don't like it a whole lot. Good call out. I'm gonna press out a few trades there later. Good call out. I always get a few good ones from y'all. I always go home with a few good setups. Hey, Calvin, what's up, brother? How are you? Good to see you. Terry, glad it was helpful, man. All right, y'all. Last question here from Fly Guy. What's up, Fly Guy? How am I with timing a squeeze fire? So, good question. Good question. So we take the squeeze, and we can look at Uber. We'll keep on picking on Uber here. Right, so we find a squeeze, and then in terms of trying to gauge, okay, is there a greater likelihood that this fire is long or this squeeze fire is short? There's a few things you want to keep an eye on, right? And I'll write a few of them out for you here. And always remember, it's just probabilities. So we're never looking for, an exact outcome every time. Our focus as traders is, can we focus on the setups and structures that work in our favor? 60 to 70% of the time, that's like top level stuff in trading. So it's not always going to work that way, but in terms of the things you do want to focus on, right? So trying to gauge which way is the squeeze going to fire. First thing is, are we above or below 21 EMA? This keyboard needed batteries a few days ago. Are we above or below the 21 exponential moving average? Because the squeeze is a big buildup of energy. So look at that buildup of energy from this perspective. It's more so flirting with the idea of squeezing and firing short when it's under the 21. When it's above the 21, it's kind of flirting with the idea of potentially firing long. So that's kind of the first, basic but really important thing we want to look for. Then you want to look at the histogram. Is the histogram negative or positive? Is it above 0 or is it below 0? So we'll jump back to Costco. Found our squeeze. Let's run it through the watch list. Is it through the checklist? Is Costco above or below the 21? It's above the 21. And on the weekly squeeze, the daily, the 4-hour, the 2-hour, the 60-minute, it's above that 21 on all of them. Right? So that's really bullish. Is the histogram above or below 0? It's above 0. So you have your squeeze. So you got the moment in time where we're gearing up for a big move. The fact that we're above the 21, so that's kind of like your rocket ship is on top of the launching pad, right? So the 21 EMA is a launching pad. If your rocket ship is hanging out underneath it, there's a greater likelihood it's going to blast off that way. If you're above it, to the upside. And then you're looking for momentum to back you up. So not that Costco has to fire to the upside, but in my experience, this strikes me as a kind of setup where it's like, hey, I'm going to get long here. And this, one single trade might not work. But man, I'm really confident. If my next 100 trades look exactly like this, we're coming out on top. Just playing that probabilities game over and over and over again. So those are two simple things. Are we above or below the 21 EMA? Is the histogram above or below 0? So if we're above the 21 with a histogram above 0, that tends to be more bullish. That tends to lead to the squeeze fire into the upside. If you got a stinker like a Snapchat, right, and you're under the 21, histogram starts to go under 0, greater likelihood it fires short. I got you, Fly Guy. Awesome stuff. Awesome stuff. Yep. Hit the nail on the head there, Josh. Got to short in the right spots. Got to pick the spots wisely. Absolutely. Absolutely. Hey, what's up, Shep? Yeah, Shep. I mean, I think from just a lot of different angles, these pops for now, this isn't big money rushing back to the market. So this isn't like the top 1%, that controls all the money in the market is waking up here saying, hey, it's time to buy the dip. We know that because one, it just continues to fail and no structure is changing. And then to Shep's point, there's no volume. There's no huge buying volume here. It's just short squeeze action. I know a lot of you did John's class last weekend on the whole algo thing. It's a lot of that. Like, let's take it to a key level, 4150. Let's rip it to 4300. It's like nasty ping pong. In terms of tomorrow, Shep, we'll have to see how the futures go here. Which I keep telling myself I'm not going to watch the futures all night, but I lie to myself every time I say that. So tomorrow's a tough call, but Shep, I think is a general statement. The fact that we're not seeing huge, through the roof buying volume, just further suggests this is all short squeeze nonsense. And as long as you got the bearish structure, should continue to trend lower. Just for now in a pretty violent fashion. But all right, y'all, I'm gonna cut you loose here. Let you run along to your families. Let's take a little mental break. We got 3 minutes here till the futures open, so not too much of a break. But hey, as always, I appreciate your time. It's been a lot of fun to jump on the mic here on the Thursdays and kind of work through all the craziness here together. So I hope a few of y'all found this helpful. Looking forward to next Thursday, but until then, trade safely, be patient, be diligent in your risk management, and I'll talk to you soon. Always appreciate y'all.